Good afternoon and welcome to the European crossover, the European daily FX wrap up here. And we did go on and see the euro go and take a slump after Draghi had came out basically stating that they have a lot of ammunition in front of them and they're able to go on and take whatever steps are necessary. That sent the euro tumbling. Actually, when we came on, we were coming on for the European crossover webinar at the time, and the euro was trading at 1246. And all of a sudden, we just saw this thing just start dropping. And to a certain extent, it could have dropped even further if you think about how dovish Draghi was and what he was advising his Sintra speech. But it did, like I said, we came down here into support. We actually had support here at 1178. So we came pretty close to it almost. It's basically... I think we had that yesterday, but 11.99 is a 61% here on the euro dollar. Go into that. Here, right here with the 61%, but we, as I mentioned, we held right just here. This actually comes in at 1180, but we just had moved it down to support at 1178. Obviously, tomorrow's FOMC day. We, it's going to be an interesting day to say the least because of the amount of pressure that Trump's been putting on. Also, some news came out that he was trying to get rid of or at least demote the Fed Chair Powell. And they're mentioning about, the Fed shouldn't be bullied into being forced. I think the Fed would have been dovish, but at this point now it makes it hard to even be dovish because it almost would seem as if they were pandering to Trump. But I still believe they're going to lay the table for, potential rate cut next month. But I think they'll be very careful in that. And I think they'll probably start out with the economy looks good and all that, which will probably give the dollar an extra boost. And then they'll probably eventually get to the point where we're experiencing certain areas that are weak. The reports, they've been weak all along. I know there's been some, people have differences of opinion. Look, with the exception of retail sales and a couple other reports, they've been very, very weak. And that's why the CME Fed's tool that went all the way up to 28% didn't get up to 28% for a rate cut to tomorrow out of nowhere. Okay, like as I mentioned, the PMI was the worst since 2008, and we've seen the New York Manufacturing Index, which is a very less important index by far, but it's the worst in history, the biggest drop in history. But the PMI manufacturing was huge, and like I said, that was a few weeks ago, but all the reports. Now, of course, now we're starting to see that ebb into the NFP, but data has been relatively weak. Same thing, housing. I mean, tell me a report that hasn't been good. I mean, if you think of it, when you compare the U.S. compared to other countries, yes, things are humming along, but we have been slowing down. But it's not a matter of, see, what we're doing is when you do that, you're looking in the rearview mirror, or you're looking right now. The Fed's looking at what may happen, and what may happen, it's not a matter of being anticipatory. Like quite often when you're looking at equity prices, you're looking at, so many months out, 6 months out. But what the Fed's looking at is the impact that we have from China. Now, Trump said, hey, there was a requested call from Chinese Xi Jinping so they can have a meeting and so forth. But we're experiencing these impacts, and you're seeing them, roll through the data over the past, 3 months, and it's gotten increasingly softer and softer. Yes, the economy is still doing relatively well, but we look to go and hit a spot with these tariffs and the ongoing thing of, whether it's going to be, tariffs on cars out of Europe, the whole tariff thing that went through with Mexico, and Trump looking for everybody and anybody. I mean, I think he's probably going to get tariffs on Jamaica too, if he can. But we shall see. Now, the one market that we did go in and see a bit of a turnaround here to a certain extent has been the Aussie dollar. We did have the data yesterday, housing, but we also had RBA minutes. We had our bias chart support here at 68.31. We actually had that from the day before also. We talked about this actually in the European crossover webinar from a couple of days ago, because over the weekend I tried to go back, even looking at a 30-minute chart, couldn't go that far back. So I went on an hourly, and it took me back to January, and that was support, 68.31. the market did hit that. I think it was 68.31 and 9 or something like that, but essentially 68.31. And what I noticed here also is the Aussie, to a certain extent, when you look at it intraday, has been positively diverging since yesterday when you think about how bad and expectant the data was going to be. And it's been trying to make a hold. So we've seen a nice rebound. We had our some real quick short-term resistance coming in at 68.82. I think we paused at 81, but this market looks like it could potentially move higher. And with that, when we look, and we'll shift into the cross rates right now. We saw a big change here with the Euro Aussie. We were way up here, and when the data had been released, my concern was that the housing data was going to be weak, and we could really push into some new highs, and certainly that's exactly what happened. The market did run out of gas now. The market was still trying to hang on. It was doing relatively well, but it was Draghi speech that really took the wind out of the sails, and then we ended up pressing lower here, and henceforth we've had a pretty big day. I mean, actually, you've seen this market essentially really a bearish engulfing line, not only for the prior day's bar, but also the close here, and we're trying to push a little bit lower. We've had a pretty good run here so far, so a pause is certainly would be within a reason. We shall see, though. Obviously, things could change. I don't think they're going to change that much now with all that's gone on with the Fed. And really, that's a big, big, big story to hit the wires. I mean, you cannot, make it any less. The idea, I remember the story coming out at the time. I guess it was December, January, I'm not sure, but Trump being very dissatisfied with Powell, blah, blah, blah. But you hear rumors and innuendo, but I guess there was more traction to that with the thought that they were actually straight up trying to, either get rid of him or to the lesser extent demote him. And certainly that's going to cause a big issue with the Fed. So, my thoughts are, even though I thought they were going to pretty much lay the groundwork for, a cut for next month, they may still offer that, but it's going to be very watered down, I think, in light of the interference that you've gotten from the administration on this. Although I think they've tried to deny that, and Kudlow's tried to deny that, but there's no doubt about that. Trump has continued to speak about his angst with the Federal Reserve, and certainly that doesn't help things. Also, we saw here with the Aussie yen. The Aussie yen is starting to turn things around. We can start to get a move here with the Aussie. It may be slow and building. I think that if the Fed if they were to lay the groundwork, we could really see a nice rebound here in the Aussie. But once again, we may still see a decent gain. It may be not as big as it could have been because the Fed may not want to be as accommodative, so to speak. One other market we're looking here was in the guppy. I posted this in the room because we had 161% extension of this move, and that came in right here at 35.46, and we saw a nice rebound off of that. The cable's been, or sterling has been pretty much in the dirt all along, so we saw a nice rebound off of this so far. We shall see what all comes about with that. And also, we've seen the Euro-New Zealand pair off. I want to go back to the main page. Really, I want to touch on here because of the big turnaround in the Euro-Aussie, and also, jump here with the Aussie yen. But we're going to get back to the main page so we can just take a quick look for tomorrow. Things have quieted down rather quickly, and today's a very good case in point. That we try and have this webinar at the same time, which is primarily 2 p.m. But I've
offered that. I'm trying to, what do you think is the right word? Talking
trying to think, it slips my mind, but with the thought that it can change, it could be earlier, it could be later. Heck, today things have wound down. This webinar could have been an hour earlier, okay, as far as that goes. And tomorrow with the FOMC, I'm not sure when that'll be. We certainly aren't going to be doing the webinar during the time that the Fed's going to be doing the actual uh, the release of the statement. It's either going to be before or after we've had a chance to digest the numbers. This market is really going to be hopping around, and I've got to trade my own self. So, like I said, and I'm not sure. You may see the market react one way once they release the decision, but you may see this market flip back after we get all the notes and everything gets digested. So we'll have to see where we're going to go on and do that, or we could do it just ahead of that. We shall go on and see. Obviously, tomorrow I think is going to be big, because I think potentially, even though the dollar can move higher, if the Fed does lay the table for that potential rate cut in July, that's going to kick the stool out front underneath the dollar. So I think we could see some pretty good swings tomorrow in regards to that. Taking a look here at the dollar CAD, we had talked about this yesterday, and even the obviously over the European crossover webinar. If you're a member with ForexAnalytix, that's every day at 4 a.m. Eastern. Actually, we were doing the webinar right when the news when Draghi broke. Eventually, we were going onto the Reuters feed reading the different headlines, but we covered about this. And one of the things we're looking at is I said that I thought that this market would need to pare back, that it would take 2 consecutive daily closes above 34.12 to get the bulls giddy, and we have not got that. We've closed at that. We've closed right at that 12, or right here at 13, but we have not been able to, and we've actually started pushing back lower. Obviously, crude oil has taken off like a bandit, so that certainly helped push some pressure. We came down into this 33.82. There was some pressure earlier overnight. Deutsche Bank recommended as their trade of the week to buy it. I think it was at 34.15. So that pushed the market up a little bit, but you can see since then we've gone in and pared back here on the dollar CAD. So we'll see how that goes and plays itself out. Cable has come back a little bit. It's still very, 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 very weak, but we have come a little bit off of these lows. Still the resistance even for today would be 25.68, and we came up a little bit, but we're still quite a ways from that. We'll see. As I said, tomorrow's going to be a very pivotal day. I think that potentially the Fed could have been somewhat more accommodating. It's going to be a very interesting tightrope to walk, because I think the Fed is probably pretty upset and are not going to want to be so accommodative. So I think it's a tight line that they may be walking, because I think they are going to have to indicate that a rate cut is possible for July. But I think at first they may be talking that the economy is okay, maybe not suggesting or offering that much. And then as we get a little bit further, then they'll lay the groundwork or start to mention, well, things do slow down. There are some global developments, blah, blah, blah. Obviously, the thing with China is certainly impacting and causing an issue. Now, we don't have any inflation, so that really opens the door that they could take a cut. And that's what the market was primarily focused on. Not so much that they would have a cut, especially after retail sales, but they could lay that groundwork and would be the extent of how dovish they may be. So we'll go and see whether or not that translates. For the euro, we'll go back into here. Well, the key is, like I said, in light of how dovish Draghi was and mentioned everything they could do, I'm surprised this euro didn't even slide like way back. Seriously. So where would we be looking at for tomorrow? Potentially be all the way down here to 1150. So you could actually, if the Fed comes out and says no change and depending on how the headlines drop out, you could make a move down here to around 1150, potentially even as low as right down here, 1144. But the kicker is you have to be careful is that once we get past and digest all the notes and talk and stuff, we could start to see the euro come back. And once again, not so much because it's the euro, but because that we may see the dollar go and pair off. The difference is that the euro still remains weak, and Draghi is indicating more ammo, okay, for the euro. But the issue is then when you have to look at things relatively speaking, which is, I'll get back to this. The dollar's been priced for a market that's been, with the Fed that's been, going the other direction from the other central banks. So if they suggest a hint to that, then we're going to go on and come down here and probably take out the 97 here, come down in here. And we may have a tough time because it'll be, who's trying to go first, the ECB or the Fed, so to speak. But when they try and see where we're going, if there's a hint and the market believes, especially as data continues to come out, if it weakens further, then the market's going to be betting on how many rate cuts there could be if the Fed lays that groundwork. But we'll have to see if they do lay that groundwork. I'll go on and tweet something out because we may just do the FX daily wrap up before the release of the FOMC, because it's probably going to, at this point, then you probably have to be well afterwards to digest everything, maybe all the way up to 3:30 p.m. Eastern time at that point. So we may end up doing it before, but I'll go in and certainly tweet something out. But thanks for joining us here on the FX daily wrap up, and we will catch y'all tomorrow.